Hey guys, what's up? My name is Aayush Khanna and we are watching our channel Aayush Khanna classes. So, from today I'm starting the free classes of accounts, tax and advanced accounts for both old and new course. Okay, firstly I will be completing the accounting standards of both the groups, whether you are in old course or old course or in new course. Okay, I'm preparing this book of accounting standards. Okay, AS 1, 2, 3, 4, 5, and 10 have been prepared so far. Okay, my book is nothing but the compilation of study material and practice manual. Okay, but the compilation of study material and practice manual. It will be full. It will be full question based book, as all the notes will be provided here. Okay. Now let's start with the first accounting standard. Today I'll be completing AS1, AS4 and AS5. Okay. Now let's start with first accounting standard. This is applicable for uh, Group 1 accounting of both old and new course. Okay. AS1 disclosure of accounting policies. Uh, AS1 recognizes three fundamental accounting assumptions. I hope you are clear with the basics of accounting assumptions. The three recognized by the accounting standard: one is going concern, consistency, and accrual basis of accounting. Now, what does a going concern means? It means that the financial statement of an entity are prepared on the assumption that an enterprise will continue its operation in the foreseeable future. The financial statement will be prepared for the upcoming years. Okay. Now, what does consistency means? Consistency. It means adopting and applying the same accounting policies in every year. Okay, like any accounting standard, AS have been applicable to a certain entity. It have continued it. Okay. Now, accrual base of accounting. I hope you know what does accrual base of accounting means. It means as soon as transaction is occurred, it is recognized. As soon as the transaction is occurred, it is recognized. For example, if we received any income, if any income has been accrued, whether or not the cash have been received or not received, we have to recognize that in the profit and loss account. Or if any type of expenditure which have been occurred, but the same have but the cash have not been paid, uh, but the cash have not been paid by the entity. It means it is then also to be recorded in the it is then also to be recorded in the financial statements of a company. Next point, what it says. AS1 says that any accounting policies and procedures adopted shall be continued in every year, or if any or if the entity changes its accounting policies or the procedures adopted, it they have to disclose it in the notes to accounts. For example, like if depreciation on fixed assets, depreciation on fixed assets, the entity is charging on the basis of SLM, that is a straight line method. Then, if if the company wishes to change from SLM to WDV, then the company have to make a disclosure in the notes to accounts for the same. Okay, now let's uh, see some questions. Only three questions are there for this topic. Okay, you have to purchase the book. Just comment your email ID under the video. You'll get all the details of at where the payment is to be received, at where the payment has to be done. After receiving the payment, only you will get the book. Okay, now let's start. Question number one: what are the three fundamental accounting assumptions recognized by AS1? Going concern, consistency, and accrual basis. You have to explain them, obviously. Second question. Mention few areas in which different accounting policies are followed by the company. Method of depreciation, value of inventories, method of depreciation like let's say, let's give an example like SLM or WDV. Okay, valuation of inventories like LIFO, FIFO. Okay, valuation of goodwill like average profits, super profits, goodwill on the basis of super profits, and so, and valuation of investments. Okay, and the market value, so, and that's the examples. Next question. Question number three. In the books of Messrs. Prashant Limited, closing inventory on March 2015 amounts to 1,63,000 on the basis of LIFO method. Okay, these are details given. You can just check it out. Now, it says that at the end of the year of 2015, the on the basis of FIFO method, sorry, on the basis of weighted average method, the value of inventories is 1,47,000 rupees. Okay, it tells us discuss the disclosure requirement of a change in the accounting policies as per AS1. Now, firstly, how will you write the question related to accounting standard? Firstly, you have to write the provisions of the relevant accounting standard, answers of case studies in of the accounting standard, facts and issues of the case given to you, and the conclusion at the end. Based on the above facts and issues, and the provisions of the accounting standard. Okay, I hope you got the. I hope you'll able to get the answer. Disclosure have to be made as it is material to the financial statement. A change in the valuation of inventories is material to the financial statement. Hence, it shall be recorded in the financial statement. Hence, it shall be recorded in the financial statement, and the amount of 16,000 shall be disclosed. Okay, the chapter is finished. Now, next chapter, next topic. I should say AS4. AS4. Now let's start with accounting standard 4. Now see this. Firstly, AS1 is of group 1 accounting of both old and new, old and new. AS4 is in group 1 accounting new course and group 2 advanced accounting old course. And AS5 is of group 2 advanced accounting of old course and group 1 accounting new course. Okay, new course. Accounting standard for contingencies and events occurring after the balance sheet date. Contingencies and events occurring after the balance sheet date. Now, what does it mean? Now, let's start with this topic. Just a second. Now, what does it mean? Firstly, the highlighted portion. What does it mean? Events occurring after the balance sheet date. Uh, by giving reference to essay that is centered on auditing number 560. 560. What does it means that the events occurring after the balance sheet date but before the auditor's report. But before the auditor's report. Okay, we have to find these two uh, time. Okay, that is let's say 31st March 2015 was the balance sheet date. Okay, and the auditor's report came on, let's say, 15th of July 2015. Okay, events occurring between these two dates are required to be in the to be disclosed in the financial statement. SF 560. Okay, now let's start. What are the certain definitions that are required to be that are to be used in this concept? Firstly, is ordinary events. There are two types of events after the balance sheet date, or non uh, or extraordinary events. Ordinary events or extraordinary events. Sorry, it is not ordinary or extraordinary events. Okay. I've mistaken here. It shall be adjusting events or non-adjusting events. Adjusting events and non-adjusting events. Now, what does adjusting event means? It means that uh, that a certain transaction, or event is known to the board of directors uh, at the time of balance sheet date. Uh, and, uh, is at the time of balance sheet date, and it occurs, and it occurs before the, you can say, board report or audit report. And it occurs before the board report or the audit report. It can be adjusted before the financial statements are signed. Before the financial statements are signed by the board of directors. Okay, transaction or events which is known to the board of directors at the time of balance sheet date, and it occurs before the board report or audit report, and it can be and it should be adjusted, or it can be and it should be adjusted before the financial statement are signed by the board of directors. These are known as adjusting events. For example, uh, we can say debtors, provision for doubtful debts is known on the balance sheet date, but it came to the notice to the board of directors that the doubtful debts do exist. Okay, it shall be adjusted in the previous year's financial statement. And what are non-adjusting events? Events which are not known to the board of directors. Okay, I hope you can. You got to know what are non-adjusting events. No, non-adjusting events uh, have to be disclosed or treated in the current year financial statement, like stating P&L account and balance sheet. Okay, for example, loss by earthquake. Let's say loss by earthquake. It was not known on 31st March, but it came to know before the signing of the financial statement. So hence it should not be adjusted in the previous financial statement, but in the current year's financial statement. Okay, now let's start with its question. There are not many questions for this or two. That's question number 32. You are an accountant preparing accounts of A Limited as on 31st March 2011. After year end, the following events have taken place in April 2011. A fire broke out in the premise, damaging uninsured stock worth rupees 10 lakhs, salvage value rupees 2 lakhs. A fire broke. It is a non-adjusting event. Non-adjusting event. Firstly, you have to explain what the non-adjusting event is. Okay, then you have to conclude your answer. A suit against the company's advertisement was filed by a party claiming a damage of rupees 20 lakhs. Describe how will you how above will be dealt in the accounts of the company for the year ended on 31st March 2011. I hope you shall be clear with the answer. Okay. Suit filed against the company as being a contingent liability must be disclosed in the nature of contingency. Okay, it must be uh, disclosed in the nature of contingency. Okay, from here you can conclude what the contingency shall mean. What the contingency shall mean. Okay, question number 33. A message Limited could not recover an amount of 8 lakhs from a debtor. The company is aware that the debtor is in a great financial difficulty. The accounts of the account of the company for the year ended 31st March 2011 were finalized by making a provision of 25% on the of the amount due from debtor. In May 11, the debtor became bankrupt and nothing is recoverable from him. Do you do you advise the company to provide the entire loss of rupees 8 lakhs in the account for the year 31st March 2011? The full amount shall be recognized as it is an adjusting event. So we have kept as a provision for doubtful debts, but the amount of 8 lakhs full will be recognized. I hope this is the topics is easy. You can go through the sums. You can go through the questions here. In some questions, the answer have not been given, so that you can assess yourself. That do you know the answer or not? Okay, the book have been prepared has in starting some answers are given, then approximately 5 to 6 of every big topic, the questions are unsolved, at least 5 to 6 questions. Okay, and you have to practice RTP plus MTP on your own. I have not included uh, these two publications and the questions and previous year's previous attempts questions, question paper. You have to solve by own so that you can assess yourself that whether you are clear with the concepts or not. Okay. Now, I was planning to explain AS52, but anyhow, I'll be telling you the paper pattern of both old and new course. Paper pattern. The concept class is over. The next we'll continue in the next lectures. Okay. Let's see. When we compare to new course, when we come to first new course, accounts paper would comprise of total 6 questions. Total 6 questions. Question one will be compulsory question for 20 marks. It will comprise of 5 marks of 4 questions. 5 marks, 4 parts. Okay, it will be a compulsory. Then from question 2 to question 6, you have to solve any four questions. Any four questions of 20 marks each, in which there would be one question of 20 marks for sure. One question of 20 marks out of these remaining five. One question of 20 marks that will be asked from partnership. It shall be a full numerical 20 marks question, or a 15 marks numerical question and 5 marks a theory question of LLP, related to LLP, of 16 marks partnership question of and 5 marks, and sorry, not 5 marks and 4 marks LLP question. This limited liability partnership question. I will include this question in my book, but I'll not explain. But I'll not explain it because I think the theory you can do by yourself. Okay, and accounting standards will be of at least total 25 to 30 marks. At least to 25 to 30 marks. In new course, November 2018. Sorry, not November. May 2018 attempt. May 18 attempt. 46 marks was out of accounting standard. Was out of accounting standard. So don't leave any accounting standard. There are total 12 accounting standard in the syllabus. AS 1, 2, 3, 4, 5, 6, not 6, 6, 5, 10, 11, 12, 13, 16, 17, and 22. These are the accounting standard in new course. Okay. Now, paper pattern for old course would be question number 1 will be 20 marks. Same pattern, 5 marks into 4 questions of accounting standard. It will be a compulsory question, and you will get an option of total of 6 questions more 6 questions. Question 2 to question 7. It will be of 16 marks each, and you have to solve any 5 questions. 5 questions, 16 marks. It will be 80, and 20 marks is question number 1. 100 marks. Okay. Uh, Accounting subject covered in group 1 accounting are AS 1, AS 2, 3, AS 1, 2, 3, AS 1, 2, 3, 7, 9, 10, 13, 10 and 10, 13 and 14. Okay. Now you will say that in practice manual the AS6 is given, uh, but accounting standard 6 have been deleted altogether from the syllabus, and practically too, and practically also AS6 have been vanished. Okay, because of uh, introduction of accounting standard 10, AS6 have been deleted. Okay, I hope you got it. Just comment on your email ID. I'll provide you with the book in PDF form, and and the payment details from where to where you have to make the payment. You will get a total of three books, three subject books: accounts, advanced accounts, a 100% question book, okay, and uh, one MCQ book for tax. Okay, it will comprise of more than 500 MCQs, so that you can practice each and every type of questions repeatedly. That if any question is asked, you can solve easily. Okay, thank you, everybody. Take care. Bye bye. And yes, do like, share, subscribe my channel.